Hey everyone, it's Rachel here, and I just want to quickly jump on here for a quick video to show you guys what's been happening in the market. Yesterday, we did have quite a number of updates going on, but I just want to really point out something that we've seen in the markets as well. Usually, this center comes later in December. This is based on our statistics from the 1950s to last year. Usually, at the second half of the year, we do see a 1.4% increase in the stock market in general. Okay, so now we are on halfway mark. Let's see how it goes. And yesterday, we did see quite a number of things coming out. We did have some delayed data from last month. Okay, so we did release the October and November results for our unemployment rate and also retail sales, non-farming employment as well. And coming up this Thursday, we do have our unemployment claims and also our CPI. Okay, let me get on my pen. Right. And yesterday we did see an increase in our unemployment rate, which rose up to 4.6%, which is a 2% increase from previous few months. And what the unemployment rate shows us is that it's actually climbing higher and higher, and we are very, very close to our 2021 all-time high. And even just a 0.2% increase for such a big country like US, it's millions and millions of people as well, which means the unemployment rate is really going higher and higher. Many people are falling out of jobs. And we also do see that the numbers reported in October, we had 105 jobs getting cuts. And in November, we do see 64K coming up as well in terms of the new jobs. So we are seeing about 40,000 jobs shortage within the last 2 months. And we also see, this is also reported yesterday, that the job creation has dipped into one of the lowest since very, very long ago. We went up to even 4 or 5 years behind. This is one of the lowest job creation months in a very, very long time. So when people have lesser money to spend because they're unemployed, they're very tight on their purses, which means companies will not make as much money or revenues, and which means that they will also lower their forecast for their growth for the next couple of months, couple of quarters as well. So this does affect the stock market by quite a lot. Okay, and last week we also see that our Federal Reserve, Jerome Powell, also decreased our interest rate for the third time this year to help to boost the hiring slowdown as well. And unemployment is still going very, very high, but we're still cutting rates to help the economy cope with these changes as well. And also, last week, we did see that the Federal Reserve are starting to do what we call the quantitative easing. They are starting to buy back some of the treasury bills to help manage the market liquidity as well. Okay, and they announced that they're gonna be buying back 40 billions worth of securities. So that is actually quite a lot of money as well that we are talking about, and we'll be seeing this in the next couple of months and also next year. Okay, and we did see that a lot of the AI companies like Oracle, they are announcing very, very bad cloud sales and also a lot of money spent on AI. And that's why recently we did see basically all the companies that are kind of like related to OpenAI, they are taking quite a big hit, just like Oracle. They're sitting way below their 200 days EMA as well, and which is also a really good opportunity because for Oracle, they are a company that just raised a lot due to this OpenAI collaborations with a lot of the AI companies. There was a very, very big gap up, I believe, in the October period as well. And now that we're seeing it all come all the way down back to lower than when they just started. Okay, and we did see Broadcom as well taking a tumble because of AI. And it's also sitting very, very nicely on our 100 days EMA as well. Really, really good opportunity because Broadcom, they are still growing very, very well and have a lot of cash as well. And we do see another very, very interesting company, Microsoft, also below their three EMA segments. Okay, we are looking very closely at this company as well as AMD. Basically, all the stocks that were related to OpenAI, ChatGPT, they did have a very, very good growth. Okay. Recently, I think AMD also had some collaborations with Oracle, some of the AI companies as well, and we did see quite a big jump. And now they are actually coming back to where they should be. And it's really, really great opportunities for us as well. Same thing for Nvidia. But those companies that are very, very independent from OpenAI, such as Google, they are actually reaching back to their all-time highs, still sitting very, very comfortably on the EMAs as well. Apple, very, very comfortable as well. And Tesla, okay, one of the more interesting companies, has actually went back to its all-time high of $489. Okay, we are very, very close to seeing $500 as well. So these companies in the Max 7 that are not very closely related to OpenAI, they are still pretty much going on an all-time high. And what we're actually really looking forward to is this decision, okay, that is coming up in I believe May of 2026. We're gonna see Donald Trump elect the new Fed chair, and the race for the new Fed chair has been ongoing for quite a while already. And on November 30th, we did see that Donald Trump says he knows who he's gonna be picking. Okay, I know who I'm gonna be picking, and because of what he said, many people are saying that he is too close to the decision, and many people are actually guessing that it'll be Kevin Hassett, and because of their very, very close relationship, or some of the decisions were being changed. Okay, so the Fed candidates interviews were cancelled because of this, and some of the interviews went on, I believe, 8 days later. And also Donald Trump said in the interview that the two Kevins are great. Okay, so these are three people that are up and running for the new Fed chair. Of course, Kevin Hassett has the most percentage and the most odds of winning, but we do have Kevin Walsh and also Christopher Waller as well, who is also up and coming, that people are taking note of them. Okay, some opportunities that I'm still looking at. Okay, Netflix, also a very, very good company. We did see a very good CAGR growth for them, and the forward PE of Netflix is sitting at 30, which is historically one of the cheapest as well. And also, I'm also looking forward to the deal that is going to be happening with Warner Bros. Whether the deal is going to be going through, or is it going to be a big fight with Paramount? We are not sure yet, so I'll be observing that. And also Meta as well, a company that is already in my portfolio. We have been adding on when when it actually hit, has been going down. We did bought a dollar cost average down as well. We did some options, and now we are seeing it go a little bit better. Okay, for Meta, but I do think that it's still at a very, very fair value. Same, they have been beaten down because of their capex spending recently during their earnings report, and also they had a very big tax that they actually paid out. So people are actually selling off because they were unsure whether they are able to keep up. But I do think that it's an overreaction, and Meta has been growing very well. Again, also the forward PE is going at 22, which is one of the lowest as well. And they are sitting on a huge pile of cash that they have no idea what to do with it. So I'm looking forward in their growth in the AI space as well. And, in the broader spec of things, I do think that, there are still many bull market potential in 2026. We also see some companies as well that have potential to get listed in 2026. Now, one of it is actually SpaceX, which Elon Musk has already confirmed that he is going to be looking to list it. And probably the first people that gets the first dibs are the Tesla owners as well. Okay, so Tesla stock owners do take note of that. And we do have OpenAI, possible valuation at $500 billion. ByteDance, who owns TikTok, Anthropic, Databricks, and Stripe. Okay, Stripe is also one of the very, very big businesses as well. So because of that, I do think that the market is still going to be pretty much bullish next year. And I really believe that stay invested in the market and don't get too emotional whenever there is news in the market. Okay, so invest safe. I'll see you guys in the next episode.